Okay, this is Boulder Lone Ranger Uncut, and today we're talking about a very complicated subject in many ways, and that is mortgage insurance. You have two different types of mortgage insurance. You have private mortgage insurance or Fannie Mae, Freddie Mac, FHA government insurance. Now, the government insurance comes into play when you have a government loan such as an FHA or VA. That is funded by the government, receives a nice low rate for the mortgage insurance rate, and is required on all FHA and VA loans. On a conventional loan, you'll have a mortgage insurance monthly premium each month when you start a loan that is more than 80% of the appraised value of the home at the time of the purchase. Now, there have been some changes in mortgage insurance recently, mainly in the private mortgage insurance area. And that is, many of the private mortgage insurance companies have run into financial trouble with the mortgage crisis and the economic downfall. So you have a situation where the mortgage insurance companies are insuring loans that frankly are going into default. Now what that has done is changed the rules of the game. First, what happened was the 100% purchases, where you were borrowing the entire amount of the home, those started to fall off, and it dropped down to 95% was the highest that they would go for the mortgage insurance. Most of those have now fallen off. There's only one or two left, and they're indicating that in the very near future they'll be dropping it down to 90%. So whether it's a refinance or a purchase, it's highly likely that if you go conventional, you're unlikely to be able to find a mortgage insurance company to provide mortgage insurance above 90%. Now, FHA is still going to the full amount allowed, whether it's the $100 down loan or the 3.5% FHA loan. There is mortgage insurance available. It's provided by the government. There is a catch. When you do an FHA loan, you are going to have to pay an upfront funding fee. That is generally 1 3/4% of the entire loan amount paid as a fee. The good news with the fee is that you can add it to the loan amount. So even though you have to put down 3.5%, so it's a 96.5% loan, you can add the mortgage insurance premium, the upfront premium on top of that, and it's still considered at the approval at 96.5%. Mortgage insurance is complicated. There are tables to follow in order to determine your premium. Different companies offer different rates, different underwriting standards apply. So it's a complicated subject that mainly underwriters are dealing with when they're looking at the approval that is issued through what you call automated underwriting systems. So specifically what you need to know as a mortgage recipient is, what does it mean for me? What is my mortgage insurance going to be? And there is no simple answer to that question. It depends on the type of loan, also depends on whether you're in a declining market or a stable market. There's many factors. So, you know this is Boulder Lone Ranger Uncut. Call Steve Higgins, known warmly as the Lone Ranger. Get your questions answered. 720-365-9550. And I'll also update some information on this webpage as more information becomes available on mortgage insurance. This is Boulder Lone Ranger Uncut. Have a great day.